Good morning, ladies and gentlemen. I am Ivan Rodrigues, and it gives me great pleasure to welcome all of you today. As a tsunami of disruptions rising from the global economic slowdown and the COVID-19 pandemic inundated global economies, the Times of India Group has taken the responsibility of rewiring our understanding of a world in flux through the India Leadership Series, a series of interactions with stalwarts across industries spanning over 60 days in collaboration with ServiceNow. Today's industry panel discussion with managing directors and chief executive officers from the Indian financial services sector, titled Survival of the Fittest, Weaving the Resiliency DNA in Financial Institutions, will focus on immediate challenges, opportunities, and decisions required to steer the sector out of choppy waters with an aim to revitalize one of the greatest economies in the world. Doyens from the sector will deliberate not just on what it will take to navigate through this crisis, but also shed light on what companies in this sector will need to do to emerge victorious in a new world order. It is our belief that the words of wisdom from the respected members of this panel will help many peers to rethink and rework their strategy to sail through these challenging times. And so, without further ado, it is an honor, I beg your pardon, it is an honor and privilege for me to welcome the esteemed members of this power-packed panel. I would like to first introduce the members of this panel: Anubrata Biswas, Managing Director and Chief Executive Officer, Airtel Payments Bank; Arun Raste, Managing Director and Chief Executive Officer, NCDEX; Kamlesh Rao, Managing Director and Chief Executive Officer, Aditya Birla Sun Life Insurance; Radhika Gupta, Managing Director and Chief Executive Officer, Edelweiss Asset Management; Shashank Kumar, co-founder at Razorpay; and Venugopal, Arcot, fondly known as Venu, Senior Director, Solution Consulting at ServiceNow. Welcome, ladies and gentlemen. We look forward to hear from you. This session is going to be moderated by Sumit Lakhutia, anchor and senior producer at Times Network. Sumit, the virtual floor is all yours.
Thank you, Ivan, for that beautiful introduction, and a warm welcome to the panelists and the viewers. Let's kickstart things straight away. Let's just jump in. Ms. Gupta, first question to you. I want to start off with you. You know, when we're talking about survival of the fittest, weaving resiliency DNA in financial institutions, one important part of survival is moving with change, is adapting, because as it's so often said that change is the only constant. In what's happened now in the last 18 months, especially, is we've shifted and we've become an always on world. In fact, maybe a little before the pandemic started also, we've become an always on world. 24/7 is the norm. How do businesses need to adapt so that they can be on all the time to service customers, to have information at the drop of a hat or a click of the mobile button now?
No, so I think thanks, Sumit and the team for having me. Terrific panel, and I think a very important topic because, you know, just before I come to your question, I think resilience is extremely important in the business because we are ultimately a capital markets business and we go through market cycles. And, you know, having seen cycles over the last 15 years, I always believe a good financial services business is one that goes through cycles without having any good business, is one that has a robust business model. I think the last 18 months have been ones of incredible change. And I think, you know, if you look at the mutual fund industry, for instance, we've gone from a world where we probably had 60% of our transactions digitally to lockdown, where there was no enablement of physical transactions, and yet lakhs of crores of redemptions and purchases, and everything has sort of worked smoothly. And now, I mean, we are a business, we are 97% digital transactions, and that just tells you how quickly change is happening. And it is also changing many things in terms of old thinking, in terms of how to build a business. So the old belief was that you need a very extensive branch presence all over India and physical presence to be successful in building one of these businesses. I think the last 18 months have challenged that paradigm. And the old belief was that it was an industry of 5 players. You probably have 45 asset management companies and another 10 waiting in the wings. So all kinds of business models are showing up in this single industry. I absolutely agree with your point. I think, Sumit, customer service is actually an edge in financial services if we think it is. And the old days of the customer, waiting for you to respond in 2, 3 days, I think those days are over. We are one of the few mutual fund brands that's actually very active on things like social media and new age media. And one of the reasons we are, and the primary reason we are, is to be accessible to customers. I think today, if a customer asks a query, he's expecting a response quickly. He's expecting people to be accessible, leadership to be accessible, which is something that has greatly helped the brand over the last couple of years. So even the model for customer engagement has become a lot more real time than it used to be. And I don't think service is talked about enough as an edge in financial services. I think some of the fintech companies do a much better job of it than we do. But at least the last 18 months have definitely taught us that if money never sleeps, then service also can't sleep.
That's very well put, and truly money never sleeps. It's on, and so is the service provided by all the companies of yours. Mr. Rao, I want to get you in on this also, because so one thing is that for financial institutions, the customer facing employee is the flag bearer for your company. And in such a situation right now, where now we're area agnostic. I mean, I could be here in Mumbai, but talking to somebody based in any other part of the country. How do you ensure that, proper employee training is happening, and so that quick customer complaint redressal also happens in the case that there are customer complaints? So what I'm trying to say is, your customer service response has also had to become extremely agile, and especially in your sector.
Thanks, Sumit. Happy to be here. If I look at last 18 months, I first think whether nobody planned for BCP when the entire country would be shut. I think we all had BCP plans, assuming if Bombay gets shut, then we'll operate from Chennai perhaps. So I think over the last 15, 18 months, we've seen things change at such rapid pace across industries. I was MD CEO of a broking company. And I always wish that cash volumes in the market went up beyond the 40,000 crores. Look at what COVID has done. Nothing's changed. Economy is looking fine, and suddenly volumes have gone up. I think what's happening today is for every service that you want to consume in a pandemic world, I think the first thing that you look at is your mobile phone. And if your mobile phone for the product that you deliver doesn't have an answer, I think you will be extinct in a very quick and short point of time. Even from a service point of view, I think the whole issue is on the mobile phone. If the customer can't walk into the branch, okay, because we do insurance business, we have increased protection business. But the irony is that in a time like today, the more healthier you are, the more uncomfortable you are to walk to a hospital to do your medical test, which is important for buying a protection policy. Okay, so it's like a dilemma. You want it, but you're not sure that you should walk into that place or no. So how do you ensure every element of what you want to provide to the customer is through a digital means has become extremely important. So we used to have people walking into branches. Our customer self-service ratios have gone to about 85% now. There was a point of time where only 60% of our transactions were available online, digital. Now it's moved to 97 to 98%. And Sumit, the pace at which things have changed, like I am amazed. I don't know what's with the lockdown of the pandemic world, but somehow internally all your projects run on time. People seem to be happier. I mean, 30% of people in Bombay were all residents from anywhere in the country. They've all gone back to their places. They are happy working from their respective houses. Of course, timelines have got a little stretched. But from a customer point of view, if you don't have what he needs when he looks at his mobile phone, either through your app or a PWA, whatever you call it, I don't think you'll be able to execute service to the customer in these times. And I think that's a big change. My only worry, I keep telling people internally at Aditya Birla Sun Life Insurance, that I worry that in India, memory is short. Okay, so it's a bad thing to say, but the pandemic has been bad, but it has taught us some great lessons. I think the bigger worry is to conserve these lessons as we get into a non-pandemic world and don't go back to our old ways. I think that's going to be the most important part as we unfold.
True, because there's so much talk happening about, at least, I mean, if you talk about workplaces, about moving to a hybrid model, so you're using the best of both worlds. So that again, that's a huge change. But to keep that going, so that at least the company goes ahead better, the services, the products are better. I mean, so I'm talking like across industry, but that's the one really important learning that's very much, yes, true, coming up. I want to now come to Mr. Raste. So the pandemic again has seen a lot of people come into the equity markets, the stock markets, and a certain number of people have also dabbled into commodities and have shown their interest in that space. You're wanting to get your view on how the NCDEX as an exchange also pivoted as more and more interest was shown, being ready and being more, because again, it's a digital place, so it's got to be, your systems have to be up, they have to be robust to ensure that it's on like 100% you're up. So how was that process for you?
Oh, thank you, Sumit. There are two things. One, you are talking about business intelligence. You're talking about data, and data is what oil was about 50 years ago. And when you analyze data, there are two or three things which you can do with data. One is, you can do your customer interface with data. You can also meet with the regulatory requirements as far as your data analytics is concerned. Now, I'll give you an analogy of a vehicle. You have something called a brake in any vehicle, whether it's a automobile or whether there is a cycle. And the function of that brake is not to stop the vehicle. The function is to let the vehicle go as fast as possible. And wherever required, you can stop it because of the brake. Same way, the analytics helps you to run faster in terms of your probably transactions, in terms of your decisions, in terms of what you want to give to market and how do you want to trade. Now, as far as the exchange is concerned, as per the regulatory requirement, whether it is a commodity exchange or whether it is a equity exchange, the requirements are same, and therefore the data analytics is same for any exchange. Now, there are two or three things which we do with data analytics. One is in terms of our product strategy, what we need to introduce. That is something which the data helps us. Second is the whole pricing decisions are dependent on data, and the third is obviously the regulatory compliance. Now, being an exchange, we interact with our clients, and client confidentiality as well as market surveillance are two major parts. Now, even with probably only 10% of my staff comes to office these days. I hardly come once a week probably, but even sitting at remote locations, we are in a position to do both as market surveillance as well as maintaining the confidentiality of the data, not only of clients, but our own data. So market surveillance, our data helps. The last bit, as far as technology is concerned, in these times of pandemic, the speed is important. And as Kamlesh was mentioning, if you have it on mobile, everything is possible. So we are in a position to give real-time data on your mobiles at this juncture. And that is something which probably we would not have thought about probably 10 years ago also.
Absolutely. Yes, very important point there, Mr. Raste. Now, I want to take that just a little ahead to Mr. Biswas, because Mr. Biswas, if you look at any statistics, the majority of them, I mean, I think maybe all of them, in fact, say that India is underpenetrated when it comes to financial products. How is your business and how's the BFSI sector using data and technology to expand customer base? What I'm trying to get is, yes, we know how it's being used, but what are the solutions that are differentiating and helping us make a headroom in that to get to the last consumer there?
So a great question. I think the first point I just want to place on the table is that our assessment is that roughly 500 million people are deprived of some financial services product or the other. And if you step back and ask why, the real problem is the cost of delivery of financial services in the country, which broadly per customer ranges to around 1,000 rupees. The exact number is around 4,000 rupees per customer. The simple answer, therefore, to delivering great financial services is one, driving down the cost to serve, which you can only do through a combination of technology and distributed services. Now, these are two big words. Let me give you like an example of each. And let me start with the second one first. In terms of distributed services, you have to really think about how you eliminate branches and how you are able to come closer to the consumer. So today, the bank, Airtel Payments Bank, is running a network of 330,000 business correspondents. 1 in 6 villages in the country is banked by us. That's just an example of how you can really leverage what I call distribution to come very close to the consumer in a very cost-effective way. The second, and I come to technology, I think people have flogged the concept of the mobile phone, in this conversation, and it's very right and very true. I happen to agree with it, but I'll give you one number which will really be quite an eye-opener. There are roughly 380 million smartphones in the country. There are 180 million people who use the smartphone every month for financial services, primarily payments. I mean, Shashank is here on the panel with me. I'm sure he'll agree to this, but 200 million people use the phone but don't use it for financial services. And therefore, you really need to evolve technology-driven models, fundamentally neobanking, using middleware, distributed technology, APIs to ensure that there is 100% on service through your mobile phone. And we see this rightly as a huge opportunity simply because we are part of a group which has access and serves 300 million consumers across the country. And our digital bank first proposition really serves today 20 million consumers on an engaged monthly basis with a very strong digital banking proposition where 100% of the transactions are digital. Finally, we process close to 300 million transactions a month. And you can't do that without invoking a middleware solution and not core banking, which is really the big problem which banks have today.
Very interesting. And those are great numbers. And like you said, Shashank is on, so I have to get Shashank in now on this conversation, because it's truly astounding that there is so much scope to do. There is so much room to grow. But what is the challenge? Why are we, what are the big hurdles? Why are we not seeing more and more companies come in? Because the pie seems to be so huge. Why are we not seeing more people go out there and reach out to these people with the services? What's your take?
I think if I look at the environment today, I think quite a few new entrepreneurs are coming out, right, with amazing services for targeting all the folks who are coming online. See, for us at Razorpay, we have been a big believer of the trend of businesses leveraging and using internet, right, for selling things online, for the digitization journey, right, and for anyone who is not able to make that leap, right, is in some sense is going to be left behind, right? So what has happened during the pandemic, right? It has severely accelerated that trend to the point that your existing business models, the modes of conducting business in an offline first manner, right? Those have been disrupted, right? And people are left fending for themselves, trying to figure out how to start moving online and how to start accepting payments there or start taking their financial processes digital. And to people's credit, we made great strides. We have seen tremendous amount of businesses reaching out to us to try and understand how can they conduct their business online and digitize themselves first, right? So we have actually seen what has been working is we've been investing a lot in people's financial education to see how they can start understanding these technologies better, be it internet, mobile, digital financial services, right? And a lot of companies which are doing that are trying to invest in educating their users, reaching to them in novel ways, right? Not just through digital marketing channels, right? But through correspondence or through mobile, are able to figure out how to reach to them with a very good message and also help them digitize, right? And my belief is that the businesses who are not going to be digital first in future are in some sense going to be left behind. So the biggest impetus that we have today is how do we educate more and more entrepreneurs to understand this value and start moving online and start changing the way they do business at a very fundamental level, right? Throughout the pandemic, what we have seen, right, we have been one of the few companies to be able to extend, let's say, source and disburse loans to customers who have very good fundamentals, but need a little bit of support to weather the storm that is there, to weather through the pandemic. And a lot of lenders, for example, have leaned on us for the cash flow data, for new ways of underwriting, to reach out to their customers. So in all this, I think I see a very healthy ecosystem of innovation, and we are seeing good support from the venture community. We are seeing good support from the technology community, and people need to think through new ways of not just reaching these customers, but educating them, hand-holding them, and then only we'll see like the financial services truly, scaling from the net of, let's say, 100 million consumers and few million businesses to the next level.
Absolutely. And I really want to take this one point that you made on the innovation part, because it's only that now that we are becoming more open to experimentation and innovation. And I think that's what digital helps us to maybe, use one solution in a certain pocket as a test case rather than rolling it all out everywhere. So we're able to experiment with different ways to reach out to customers, to provide them better services and products. I'll now move to Mr. Venugopal, and I've come to you last because I specifically wanted you to hear all the other panelists before you answer my question, which is, yes, data, most important, helps a business immensely, but data is just numbers, is just codes, unless you are able to interpret it correctly. Your insights on that, how do you see this important aspect? How do you see businesses leverage other service providers or whether other services so that this interpretation and application of data can help them move ahead?
Yeah, first of all, very good morning to all the panelists here. I feel there is a great appreciation for technology and technology adoption. And during these times, I think the leaders have used technology as a paddle to row forward. And that's a great thing at an accelerated pace. What during this time it has provided us is in terms of, I say, access and availability. If the elite panelists here are here, the access to them and having this conversation for an hour without much of travel hassles is a big thing, right? And availability is another thing because all the nuances around it is eliminated. This is when translated into what Radhika said in terms of resilience. And when she said, if money never stops, so does service. What lies behind the service is what resilience is about. How do we bounce back quickly, or how do we predict things before something fails? And that's what I think Arun also mentioned about brakes are helping you to go faster. If you have the right technology fabric, that's going to help you make such decisions in a faster manner. And I think Kamlesh also mentioned that mobile is an aid, but is mobile that is everything? No, it has to develop, it orient itself into a business. Like you said about data, what does data translate into? It has to translate into work, and the work has to flow to the last mile. And we hear about, and Kamlesh made a very nice point that more healthier person found it very reluctant to go and ask for something because they were concerned about their health. How can the field reach to them to make the transaction happen? So the need for a connected enterprise, and that's where I think it was elicited very nicely by Anubrata also in terms of a distributed network, is about making those connections happen. These connections are contactless. So how do you make those connections happen and make those connections contactless is something that technology is helping. So to contact connections is interdepartmental, interbusiness, and the enterprise is growing beyond the enterprise itself. It's a connected enterprise between your partner ecosystem because we're sharing risk with the partners and rest of the ecosystem. At the end of the day, customer is all that matters. And, Radhika emphasized so much in terms of how customer is. But again, I leave behind, if there is no digital footprint and if you fall behind on the digital journey, you're going to be left behind. And that's an amazing statement by Shashank. But these are all tech companies. but helping technologies to drive business outcomes is something that we need to do. And someone also mentioned about value. At the end of the day, it is about value. It is not about a transaction. It is not about a technology as we started about AI, ML, or a mobility or a chat. It's about what that conversation leads to. Does it change to behavioral changes? Does it lead to productivity improvements and various other experiences? With this, I'll hold on my thought to listen more from the elite panelists here. Thank you, Sumit.
Thank you for that, Mr. Venugopal. And it's true, because I mean, if the customer is king, I think digital is now the way that you get a hearing with the king or the queen, so to say. Ms. Gupta, coming back to you, earlier you mentioned in your first answer, and you were talking about how 2 to 3 days used to be the time it would take for a company to respond to the customer. Now, I think even 2 to 3 hours sometimes is considered late. You need to be faster than that. In such a situation, social media definitely helps. And having leaders on social media, and I know you are very active, whether it is about, sharing a cover letter that impressed you, or talking about how young employees today seek purpose more than a paycheck. In a situation of a crisis, when you need somebody to just be there to reassure customers or talk to them about, hey, what's happening in the company, your thoughts on how business leaders can maybe leverage social media, or how should leaders take that front step to be there to show the company that, hey, we are here, to show the customer that, hey, the company, the top management is here for you. Even if there's a problem, we are handling it. Your thoughts on that?
Okay, so this is interesting, and I have had multiple perspectives from within my own industry and outside on social media. And in fact, a majority of leaders seem to believe that being off social media is sort of the right way to be, especially the more senior you get in the business. I think that if we're talking about digital can't only be transactions and servicing. It is also availability and visibility. And I think brands now need to be a lot more authentic. I think people and consumers want to understand their brands better, and they want to get first-hand information on their brands. Now, in a business like ours, we are not just sold via edelweismf.com. We are sold via a network of distribution partners. We are sold by a lot of online channels. But it's also, we are ultimately the manufacturer of the financial product. The investor is finally building a relationship with us. And so for me, the point of being on social media is that the end consumer, whether he's bought through a small IFA in Raipur or whether he's bought through the online platform of some fintech, should know that we are there to answer questions. The other problem is that our industry is one where there is excessive amount of information. I almost joke that we are like Bollywood. Everything from our NAVs to our portfolio to our compensation, everything is out there, and there is a lot of public disclosure, and that means there's a lot of public discourse. It also means that in a crisis, there is a lot of misinterpretation that happens. So I'll give you a silly little example, but frequently you'll see some stock. I mean, yesterday the media reported something about lots of mutual fund companies taking a huge bet on Vodafone Idea, which has been in trouble, etc., etc. And of course, and with no disrespect to the media, it went down. It was incorrect reporting. It was, it didn't take into account the fact that these are hedged positions and consumers were not affected. Lots of people started panicking. At least social media was the modicum for us as a brand to clarify where we stood on that. So yes, I think we have found it useful in times of crisis to communicate to consumers. And I think about my own experience as a consumer. When I've been frustrated with a brand as a consumer, I've frequently taken to social media. And if I get an answer, I had an issue with Cisco once, and I got a response from the Cisco CEO very quickly. I was a lot more comfortable with that brand. So that has been our take. I think one is to make the brand accessible. Second is to know that we're there to answer problems. And third is to shape responsible buying behavior. So I think these are the things that we're doing. And I think critics of social media, I would just say that it's democratized marketing in some way. You suddenly don't need large ad budgets to kind of go out and reach consumers. You have all these mediums to do that. So if you're not using it, it's to your disadvantage.
Absolutely, because it's so easy there. And I think, like what you said, it just makes the company become more human. It feels like a human interaction rather than I'm talking to a chat bot, or rather I'm getting a standard reply. It just helps the customer feel a little bit more at ease, a little bit more comfortable. It helps bring out the culture of the company, so to say, as well. Mr. Rao, one other thing that's happened during this pandemic, and we spoke about it a little earlier as well also, in the insurance business, predominantly it's been like the face-to-face interaction where the agent or the employee of the company is talking to the person who's going to get insured or is going to buy insurance. Now that's totally gone out of the window because of the pandemic, but obviously insurance selling could not have stopped. It was very much required, as the industry as a whole has been a big support to the country during that time. How has that pivot happened? What are some of the learnings from that? What are some of the good points that you're taking ahead, and some of the bad points that you will work on for the way ahead?
So like I said, the pandemic has brought a lot of newness and freshness to the way things are bought and consumed. The insurance has always been seen as a push product. Courtesy the pandemic, I think risk awareness and risk averseness both has gone up. People are asking questions in terms of, am I insured? And the ones who are insured are asking, am I insured enough? So that's the change that we are seeing. Face-to-face also has advantages, but what the digital world has brought in is the fact that we are able to now tell the products that we sell far more clearer, because the communication that goes to the customer is through presentation. There are no ifs and buts, otherwise insurance in the past has also been plagued by, did I understand my product right? Because what you're buying is, you pay for about 15, 20 years and you realize the benefit maybe 15, 20 years after that. So sometimes the complexity in a face-to-face leaves room for questioning. The digital world has changed all that. You're sending out communication, people are consuming communication digitally. Of course, we've got work to do. It's like saying, just because the world has changed, I can't train differently digitally. If I'm going to sell to you on a digital platform, I have to train to you, how do you sell on the platform now when you don't have your body language and the warmth of what you carry in face-to-face meetings being different. Previously, when I would go to Sumit, I wouldn't even know what I would sell to him. But today with data, with bare minimum information that you have, I can find the propensity. I can tell you which is the best product for Sumit to buy will be different from what Shashank should buy. I'm able to make an offering very, very differentially. And trust me, what has happened in the last 18 months is, for the same guy, the productivities have gone up by about 30-40%. Now, there are a lot of talk about lockdown bringing down costs. But the biggest thing I'm bullish about or happy about is actually not just cost. The productivity of our people have gone up because their mechanism of interaction has changed. And the proof of the pudding in life insurance company is claims. So the ability to say that when it matters, if I'm not able to go to the branch, but still go online and say pay, and I'm able to get the check back in 24 hours or 48 hours, I think the world is changing pretty fast, Sumit, and I'm happy that it is doing this to a lot of us, because a lot of things that we never thought or would have otherwise changed in 5 years, we've actually been able to collapse that in the last 18 months time. And like I said, if we maintain the goodness of what all that we have learned in the most horrible time of the last 100 years, I think the BFSI industry will be in far better and fitter shape with times to go ahead.
Absolutely. So quickly, just one point that you think that you have learned and you don't want to take ahead, maybe. Is there something that you've learned and you said, no, okay, this was there, but maybe we don't want to take it for the way ahead?
No, so the physical world is urging to go back. Okay, so the problem I say with people is, they say, I want to work at home, but I want my seat allocated back in the office. Now, you can't have the best of both worlds. So the whole idea of saying, whatever is the goodness that we can preserve and take forward, I think conditioning of the mind of our people and intermediaries is the big thing that what I have learned that we have to make sure we take forward in the future. Absolutely.
The employees are what in the end makes the company. So we've got to handle that part as well. Mr. Biswas, your service, your product or your service, the payments bank is across. What I mean is to the villager in a small village far away, or to an executive in urban India, maybe in Mumbai. They use your product. They're using your payments bank service. how do you cater to this spectrum? Because what works for the villager would not work for the city dweller, and what works for the city dweller doesn't work for the villager. But you've got to be able to provide everything to them. And how are you able to pivot around that to bring in these changes, these minor changes that are required to keep the customer happy?
So firstly, I must put the consumer base on the table. Today, we are serving around 55 million consumers on a very engaged basis. And as you rightly pointed out, they're quite disparate in terms of usage and segmentation and profile. So the key here, Sumit, is that we don't define ourselves as a BFSI sector company. We see ourselves as a propositions company. And therefore, what proposition we have for what segment is what really drives offtake and uptake and product delivery for us. I'll give you one example. We realized roughly around 18 months back that in tier 1 and tier 2 India, around 57% of users are scared to use digital payments because they are afraid of fraud. This is a very different insight from convenience, or a very different insight from the fact that people don't have money in their accounts to begin with, which is a problem of, I would say, Bharat and not India. And therefore, it took us roughly 12 months in collaboration with Airtel to design a mobile-first, world-first safety product called SafePay, which basically uses the customer's SIM to deliver a third layer of authentication before the consumer does a digital transaction. That's seen phenomenal offtake. We have 500,000 consumers using that product every day. And we have 2 million consumers who are part of the bank's digital banking proposition as a result of that. So this is an example where I feel, look, if you look at the revenue market in the country, it's broadly a $200 billion market. I mean, if you take that revenue and you look at valuations, actually the BFSI sector should be driving capital market valuations of the country in a significant fashion, but it's not. And I would submit that the relevance of the sector will continue to be driven only by companies which will design consumer first propositions, which is what we are trying to do in a very small manner in our own way. Ultimately, the market will need 10 to 20 large companies who are really driving change.
Yes, totally. That is so much required there. I want to come now to Mr. Raste. So the exchange is in a highly regulated sector. There's always a lot of scrutiny around the company. And at the same time, you have customers who want millisecond responses, who want, and they're doing so many millions of trades. How do you balance this regulatory perspective while also ensuring customers are, you're providing the best services while trying to achieve growth in this space?
So let me go to the value chain of the agri space, the commodity space. So when I say customers, it is not only the brokers who are sitting in metros. I start right with, a couple of days ago, I had an interaction with a farmer producer organization and their members, and they were sitting in MP, and they told me a very interesting thing. They said that we normally every day we see the NCDX sticker and we see the rates, and when the monsoon reaches Kerala, we see the rates of soybean, and then we decide whether we want to grow, sow soybean or whether we want to sow cotton or any of those, because the futures on the exchange is giving them the indication that 4 months down the line, when the harvest comes, what will be the rates like. So the strategic decisions at a farmer level are enabled by us. So that is one set of segment of customers for us. The second set of segments, if you're looking at a large corporate like ITC, they will also utilize the data being put out by exchange on the same parameters, and they will look at what will be the sowing in a particular area in a particular geography for a particular commodity, and then they can make a buying decision, or they can hedge their positions against their export commitments or processing commitments. So even for somebody like ITC, the same data which we send out helps them. Now the second thing, as far as the regulatory requirements are concerned, Now there is a broker, somebody like Radhika sitting here, our counterparts, if they're dealing in commodities, if I'm doing my market surveillance and I'm managing my data, I can tell them that, okay, I can send them an alert that you have reached your position limits. So that's a real-time thing. Then all the algo traders, they are dealing in 1 paisa difference. They are trading on, they make money in paisas. And for all those algo traders, we are enabling those trades also. So unless we are up to date with technology, or we are one step ahead of technology, we are not in a position to meet the whole spectrum from farmers to an algo trader to a corporate at one point of time. As far as regulatory is concerned, the market surveillance is a major part. And it is for data confidentiality as well as looking at the limits. And that data we regularly need to update it to our regulator. And that is something which our systems, the analytics systems, provides us. The last bit, you cannot do this unless probably the operations team are in a position to manage this, whether it is remote, whether it's sitting at home, or whether it is in office. And unless you have that commitment of operations team and the commitment of executives to derive whatever you want to do in terms of customer satisfaction, you cannot reach out to clients and expand your business. That's it.
Fantastic, Mr. Rasta. That is really important. And it was great that you give us the perspective of all the stakeholders. So even the farmers in whatever part of the country that they're coming in from. Shashank, for you, the business that the service that you provide is to a lot of businesses. And how did you have to kind of handhold many of them who were, I know you earlier spoke about educating them, but did you have to involve tweaking some part of your model to maybe customize it for customers to provide some services, and maybe you realized that some other things that you hadn't thought of you had to put into place so that they were helping the customers come to you?
Yeah, absolutely. I think none of us ever anticipated the magnitude of disruption or the duration of time for which the pandemic is going to last, right? And I think as an org, we never prepared for it. And honestly, I don't think our customers were also in any way prepared for it, right? But we quickly went back to drawing board and thought through a lot of things that we thought that in the changing world will sort of start becoming applicable in a big way, right? I talked about financial education and digital education and how we baked it as part of our onboarding journey, as part of our product usage journey, much more than what it used to be. As an organization, we've always been focused on enabling businesses for payments and other financial products that are there, right? But in last 1.5 years, 2 out of 3 customers who have come onto our platform are using internet for the very first time, beyond consuming content or messaging, right? So this is their first real usage in a way for their own utility in a big way, right? So we have invested a lot in in vernacular content, in vernacular and localization of the product that is there.
Yeah.
We invested a lot in strengthening our mobile offering, right? Because all the new businesses that are coming up are mostly focused on mobile as a format, and web has has already fallen by the wayside before the pandemic started, and this has kind of accelerated that further, right? Believe it or not, like we saw a lot of spikes in fraud attempts by bad actors, and obviously a lot of bad actors want to take advantage of the situation. And we have invested significantly in bolstering and ramping up on our fraud management, fraud analytics, and preventing any good business or good actor from getting affected, right? We want to we have further invested in building trust for these new age companies coming online, in the sense that we have tried to create a razor pay stamp of approval that if a consumer is coming online, if they see a new a business without a brand name, right, which doesn't have the backing of a brand like, let's say, Flipkart or Amazon and the likes, but they have to do business, right? We vet them thoroughly, and we tell the consumers that this is a business which has been in operation for quite some time, and they are trustworthy. They have no no chargebacks, no frauds happening there, right? And they're doing deliveries on time. And that creates a lot of time, a lot of trust with the end consumers that are there. And, a lot of businesses are very thankful for, for any initiative which builds trust with the end consumers and also helps them with conversion of the, the end transaction that is there. Last, I would say, I think we have been ramping up our efforts on credit offering. I think we are one of the few lending platforms which have tried to be more aggressive on credit offering during the pandemic because of the kind of transactional data that we are able to see onto our platform, right? And we are able to, separate out businesses which have the capability to survive the pandemic with the kind of support, the little support that they can get, right? So I think these are just a few. I think beyond this, then more from a perspective of NGOs and social organizations and self-help groups, we try to help a lot, for them to support the ecosystem in terms of the the pandemic that is there, enabling donations through Facebook as a platform, by enabling donations through Twitter as a platform, and various such other initiatives.
Superb. That's obviously been really, really helpful to all, especially that sector, the NGOs and the services sector there. Mr. Venugopal, one point that Shashank brought up was the attacks, the strikes that were happening. So cyber attack. You in a company, you never want to hear that word if it's related to your own business. But in today's environment where people are working from home, confidential data is being transferred over the networks from somebody who's sitting at home to the organization at the headquarters. How can companies ensure that they're using, the right systems, the right protocols to protect their data, to protect the organization and to protect their customers?
Yeah, I think Shashank and even Anubrata brought it up. First of all, I'm spellbound for a moment with regard to the propositional company expression that it goes about to that propositional logic. And it is not about having a product and trying to position, but it is summing up a need and satisfy a need in terms of the outcome. And it triggered my mind in terms of those logical expressions. That's fantastic. And probably after this session also, it will continue to remind me of deep diving into it, because that's something that is ingrained in our ethos in terms of it is not about we have something and we give something. It's about the impact of it and how we can solve a problem, and that remains forever. And this space, especially when the data said around 7.1 billion is the loss due to occupational fraud, and 216 is the average daily alerts that indicates the growing rate of regulatory changes. Remember, regulatory changes are continuously changing day in, day out. And the average cost of these breaches is like $3.9 million, something like that. So there is significant business disruption because of these changes. And hence the need for continuous monitoring, setting up policies that are specific to products, specific to businesses, specific to the regulator. And this is complex, and to the industry that we cater to. Bringing all of them requires continuous monitoring, which ensures that there is a self-made system that regulates itself when a new guideline or a new message is passed by the regulator, that there is an alert in terms of is this being done, or collaborate between the partners. There is another dimension to it, which is the third party itself. And we all rely on third party a huge. And when Radhika was also mentioning that you mentioned a very nice point about a manufacturer of digital products, and that brings into you always think that finance is a different dimension, but you put the manufacturing aspect to it. Is about creation of it, but also it is dependent of the network of distributed partners. How do you ensure that we de-risk and ensure that continuity of business happens? These are all fundamentals in terms of how we map these entities and ensure that there is a predictable way to manage these connections and ensure that continues, the work flows. At the end of the day, it is about, the day is about from 9 to 5, we moved on to a 5 to 9 jobs. How do we ensure that the work flows irrespective of how the work is, what the work is, and where the work is. And it has to be safe, secure, and resilient as well.
Absolutely. It's because it's no longer work from home. You're living at work now, which is what's happened. It's been a fantastic discussion. There is so much more I want to ask, but we're running out of time. So I'll just quickly come finally to for one last set of closing comments to all the panelists. If you could just quickly share your leaving thought, and ideally, I would love for you to say your view on where you see your specific sector heading in the next. I'll leave the timeline to you. Next year, the next few years, whatever, and just how good businesses can stay resilient during that period. So, ma'am, Ms. Gupta, if you could start with you first.
I'll be very brief. I think mutual fund penetration in the country is still 10%. Even the world average is 40%. So we have a journey of 10 to 40 and much beyond. So the pie is incredibly big. I think it's not about splitting the pie, but it's just about growing the pie. The only thing that we need to do is grow it in a robust and sustainable way, so that consumers come in as informed consumers at the right time and actually enjoy the benefits of compounding. And if we are able to do that, we offer a fantastic product.
Absolutely. Thank you for that, ma'am. Mr. Rao, if I can get you in with your closing comments.
I think the life insurance companies have an opportunity, to maybe do in the next 5 years what they achieved in the last 10 or 15. So I think that is the scale of the opportunity. I keep saying this at different forums, that I think we all have to look at our jobs as CEOs of technology companies and digital companies that, by the way, are delivering either mutual fund as a product or life insurance or general insurance as a product. I think if we redefine our roles like that, I think the times have provided an opportunity to really increase the penetration. Like Radhika said, the penetration of insurance is very low, but I think the risk awareness or the awareness is at its peak. But we'll have to find ways to make sure we reach to customers quicker, faster, and better.
True. So it's just not companies that need to be digital first. Management itself also needs to be digital first. Thank you for that. Mr. Biswas, your closing comments, please.
I'll go back to my starting comments. There are 500 million people who need financial services. Our belief is that every 100 million people brought into the folds of financial services adds directly a 1% growth rate onto the country's GDP growth rate. So 500 million people should straight away add 5% on top on India's growth rate. And there, every single BFSI player has a job to do, which one can do embracing technology with courage, care, and humility.
Fantastic. So very well put. Thank you for that, Mr. Biswas. Mr. Rastes, your closing comments, please.
So if I compare Indian commodity markets with international commodity markets, if you're looking at US or Japan, countries like those, commodities market probably have about, they are 1/10 of the size of equity markets. And India, it is just about 0.005%. So we need to grow at least 100 times of the present. That is the first thing. The second is in terms of products, everybody is aware of Sensex or Nifty. We have launched something called Agri-Tex, and Sensex or a Nifty equivalent, which has about 10 commodities underlying. And that will be one feature where all these financial players, those people sitting in this panel, also will be interested in. Third, the exchange will ensure two things. One, possibly the subsidy bills of the government will go down, because from MSP regime will move to futures and derivatives regime in commodities. And therefore the government will benefit because of our efforts. That's first. And second, the exchange will ensure that going forward, there will be equitable distribution of profits to all stakeholders. That's the agenda for next 5 years. Thank you.
Great. Thank you for sharing that. Shashank, if we can come to you for your closing comments.
I think, there are millions of businesses, right, which are underserved, be it payments, banking, or credit offering, right? So the opportunity or potential in front of us is actually huge, right? Key to cracking this is going to be how do you, personalize your offerings? How do you scale last mile delivery in a big way, right? In next 5 years, and I think we are focused on our mission that we have to digitize Indian businesses we have to digitize all the back office operations, make it more efficient, move away from any kind of manual work that is there. And my belief is that if we are able to achieve this as an ecosystem, as a company, as a country, then I think it will help us move further on the GDP and probably move India towards the goal of $5 trillion economy by 2025.
Definitely help the much needed growth that we are always looking for. Thank you for that. Finally, Mr. Venugopal, your closing comments, please.
It's been humbling to hear all the elite leaders speaking today. I think the first one is, and it sums up many of the conversation I heard today, is velocity. And I mean, velocity is a vector quantity. It's not speed, just that we put something and create a sprawl, but it has to have a complete direction in terms of how we move forward. The second is experience. It's an experience world where multicultural, generations of people are working together, unlike anywhere else. But that's where the experience comes in. How do we bring this experience to bring the businesses run smoothly? And last but not the least is, while we are on the speed, on the vector quantity of velocity and experience, how do you bring the immense of intelligence to create behavioral science, to create advanced predictability, to make our businesses resilient and continue in a more surge of business, I would say. With this, I give back to you, Sumit. Thank you very much.
Thank you, Mr. Venugopal. Thank you, Ms. Gupta. Thank you, Mr. Rao, Mr. Biswas, Mr. Raste, Shashank, and Mr. Venugopal. Absolutely stunner of a panel discussion. I thoroughly enjoyed this bit where we spoke about survival of the fittest, weaving the resiliency DNA in financial institutions. And it's great that we've got insights from so many sector experts to realize that there are so many different elements that come into play, but that there is so much that is happening to achieve that. Thank you so much for that. Thank you to the viewers. With that, I hand it back to Ivan.
Thanks, Sumit. Well, what do I say? Given the experience mix on this panel, my takeaway in the last 50 minutes has been more than what we sometimes strive to achieve in a day-long panel. I echo the sentiments of Venugopal and Sumit at the end. It was an honor and privilege to listen to all the members of this panel: Anubrata Biswas, Arun Raste, Kamlesh Rao, Radhika Gupta, Shashank Kumar, and Venu, you too. Thank you for taking time off from your busy schedules and sharing your valuable insights with us. I'd like to thank Sumit for doing a fantastic job of moderating this panel. It was great to listen and learn from these bright minds and influential leaders and hear them talk about transforming organizations in the financial services sector to achieve resilience and authenticity and help one reach the stage of customer delight. I am sure we are leaving with some very important takeaways. Thank you for joining us. Stay safe. Have a good day.